Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 14th of September. Starting off with the FTSE 100, which is making good progress above a rising 50-day line. Consolidation above a rising 50-day line tends to be a good signal, especially near the lows. Initial target here up to the 200-day moving average, the back line there 76.30, and also that's the top of the falling trend channel from February, which has been bugging us all year. Through 76.30 on an end-of-day close basis, could be up to that late May resistance line projection at 7,800, which would obviously be nice, maybe by the end of this month. If we break back below the 50-day line and that mini rising trend channel from last month, then probably 7,400 still the worst that we might expect on the downside. RSI in the low 60s, which is healthy, not overbought yet, and we are still in the aftermath or afterglow of that bounce off RSI 50 at the beginning of the month, which has given us this rebound. Moving on to the DAX, which has been struggling near the floor of that rising trend channel from back in December. Not quite here nor there at the moment, but 15,600, I suppose, the line in the sand. We've got a 200-day moving average level at 15,500 potential support, and if that breaks, then we're looking at 15,100, which is a late May support line projection. But at the moment, might get away with just bouncing off the 200-day moving average area and then heading back to the 50-day line at 15,900. Still a bit too close to call. RSI configuration not good. We've had an RSI 50 failure, so that tends to be a leading indicator on the downside, and so far that's worked after the 50-day moving average failure the other week. On to the Dow, and here the picture, I suppose, similar one to the DAX, a little bit better in the sense that that October uptrend line from last year, 34,300, is still acting as decent support. In fact, we hadn't had to touch it over the course of September to date. Still want to see an end-of-day close above the 50-day line at 34,800 to then take us back to the best levels of the end of July, around 35,500. Probably the only missing ingredient now for a move to the upside would be a break of RSI 50 versus 47 at the moment. In fact, we've had an RSI 50 failure, so that means we might have to factor in either a test of the 34,000 area or even the 200-day line there at 33,800 before this market resolves itself back on the upside. On to Bitcoin, and here the picture is sort of slightly fuzzy. We basically bounced off June support there on the 200-day line, 25,200. Above that, I suppose we're looking for a potential break of that resistance line there from July, 27,400, and then that could potentially give us a move back to 30,000 plus, which is where we were at the heights of the summer. On the downside, we really don't want to see this market back below the top of that gap higher that we had back in March, 24,000 or so, as that might suggest we are going to roll over and head back to where we were at the beginning of the year. Moving along to the stocks, and first is Alchemy, which has finally done what we were hoping it would do. We had bullish divergence going into this support area near the 120 area, higher low earlier this month, and then a break of that falling wedge from back in April around £1.40. Said before we wanted a break of 140 to take us back to £2, and we are now on the way there. A bit of resistance in the 160s, and so end of day close through 165 where we are now should hopefully get us up to £2 as soon as the end of this month. £2 area is also the area of the 200-day moving average, so that all fits in. Upside valid while we hold above 150 now and that 50-day moving average. Aura is next. Not quite the most exciting stock in the world, but we do have, or did have, an unfilled gap to the upside through the 200-day moving average at the beginning of the month. We've now got a V-shaped bull flag, which looks like a mid-move consolidation, and that should hopefully be enough to get us up to 20 pence over the next 4 weeks or so, maybe even by the end of this month, to retest the 2023 resistance. Upside valid while we hold above 13 pence, looking for 20 initially. On to Caerus, where what the bulls were hoping for has finally happened. Cavalry have arrived. Overall, the pattern here extended consolidation near the lows. A broadening triangle from July last year, top of the triangle there at 10 pence, which I suppose represents a best case scenario target. We'd like to see the shares close above the 200-day line at 4.5 pence today, or at worst remain above the 50-day line at 3.5 pence. If they can do that, then 10 pence could be on the cards by the end of next month, especially after all the consolidation that we've had for over a year now on that situation. On to Cadence, and here it looks as though the shares are finally getting their act together. We've got basically a W-shaped rebound, and what's also useful here is that we had an unfilled gap to the upside to start the week. Unfilled gap to the upside at near the lows tends to be the start of a bullish move, and we also got an uptrend line in the RSI window to celebrate as well. The view now is that having broken a line of resistance from back in May, or breaking it, let's say, we're looking for a move up towards the top of this formation I'm just about to draw now. So that's 11 pence, basically a triangle in place over the last year. The view is that the longer we stay above the 50-day line there at 7.7 pence, the greater the chance of a move to 11 pence, perhaps as soon as the end of next month. Moving along to Checkit, which has had a very decent RNS today. Unfilled gap to the upside. We've got rising 50 and 200-day moving averages, so they are in the run-up to a golden cross. Golden cross run-up tends to be the strongest part of the cycle, so that means we're looking for the top of that rising trend channel from the end of last year as high as 40 pence by the end of next month, while we remain above the 200-day line currently at 24 pence. Ideally, we don't even go back below 26 pence after the gap higher that we've had today, but that rising 50 and 200-day line formation looking very strong indeed, and I suppose we also have an uptrend line in the RSI window, so the technicals matching very good fundamentals there. A stock which I wasn't expecting to be looking at again is on the roster now. Here we've got Juke Mount, and with a bit of creative charting we can guess that the low yesterday at 0.1 pence was the floor of that rising trend channel from the beginning of last year. Top of the channel there as high as 0.27, so we're looking for that maybe by the end of next month. We're lucky by the end of this month, and the upside only valid though while we hold above 0.1. Ideally we have multiple closes for the shares above the 50 and 200-day moving averages there at 0.15, so above 0.15 looking for 0.27 or 0.28 by the end of next month. I see that uranium prices are going through the roof at the moment, which is obviously celebrating the Japanese letting off radioactive material into the sea recently, but here we've got Geiger Counter hitting our first target there at 51 pence, above the floor of the recent bull flag at 48 pence, looking for a fresh target here, and probably that could be as high as the line I'm about to draw at the moment, which is derived from late last year up towards 58 pence, so hopefully that's going to be hit by the end of this month. Obviously the big picture here by the end of the year is hopefully to get back to 75 pence while we remain above that mid-40s area on Geiger Counter. On to a requested stock, one of the stocks of the moment, Greatland Gold. I think that maybe the share price has been slightly disappointing given the solidity of the news today in terms of funding, but we've had a bear trap gap reversal. The idea here is that the longer we stay above June support there at 6.3 pence, the better or the greater the chance of a move at least to 7 pence by the end of the month, and hopefully up to 7.5 pence or 7.75 pence at the top of that triangle from June by the end of next month. Alas, this doesn't seem to be a very fast moving situation, hence the relatively modest calls there on the upside at the moment. But the key here is staying above that June low. Moving along to Helium 1, where people seem to be taking their positions ahead of the big spud later this month. Interesting today that we've had a close, or we're going to have a threat of a close above the top of that gap there, which is around 6.5 pence. So 6.5 pence plus, we're looking for up to the 50-day moving average at 8 pence over the course of the rest of September. And obviously, if everything goes right, we're looking for 10.5 pence while we're above 6 pence and the floor of that rising trend channel from November. Itsarm is next, which is broken out of a little wedge that's been in place since the beginning of last month. So the level there, the 1.6 pence level above that, we're looking for 3 pence by the end of next month at the top of a broadening triangle from the beginning of last month. Ideally, the shares stay above that 50-day line, and that's just below the breakout level of 1.6 pence. Myriad is the next contender. Here you can see that we are finding support at old resistance, so the old target here around 2.1 pence Above 2.1 pence, looking for the shares to progress to the next resistance line projection, the upper parallel there from back in June, and the 200-day moving average around 3.2 pence. Hopefully we could see that by the end of next month, but the key here is holding the 2 pence area in the meantime. I tweeted out about Synergia yesterday, and luckily the shares are responding. The call there was that the shares have broken out of that broken that resistance line there, that wedge there from back at the beginning of the year, so that call that 0.12, and that's also the position of the 50-day moving average, so above 0.12, looking for 0.19 or 0.2 pence by the end of next month. The rallies here started by that double bear trap from below the 200-day moving average at 0.11, and we're obviously hoping that the floor of that channel at 0.1 remains in place ahead of a move up towards the 0.2 pence area. Finishing off with Shearwater, here you can see that we had a bear trap island reversal, so gapping down in August and then gapping up. We've held above the top of the gap there, which is a healthy thing to do, and above that at 42 pence, looking not only for a resistance line target there around 51 pence at the moment, but also up to maybe as high as 71 pence by the end of next month or going into November. That's it for me today. More updates tomorrow.